What's going on, guys? Foresight Capital here. Today we're going to break down Palantir's recent price action and talk about the key support level that's come into play for the first time since the end of November of last year. We're also going to talk about how long I think Palantir could be trading in this $20 to $30 per share range before breaking out meaningfully higher. Palantir is one of the most fun stocks out on the market because it has the exuberance of retail traders and institutional investors behind it, and you can consistently make 5 to 10% on a weekly basis by simply buying and selling the stock near key support and resistance levels, but it's also going to be a stock that could explode in the long term. So this is one of my largest holdings in my long-term portfolio, but it's also a stock that I've consistently been buying and selling near these levels that we've been talking about for months on this channel. So we've actually seen a bit of a breakdown in Palantir over the past couple of weeks after coming back up and testing the long-term resistance level of 2770. We've seen a pretty big sell-off as a lot of tech stocks are really getting shaken down over the past couple of weeks, and valuations seem to start to matter more and more to a lot of investors out there as investors are looking for value plays. And Palantir really isn't a company that's undervalued currently. I still think it should be trading higher, but from a valuation basis, it's maybe even trading a little high. So we're going to talk about that a little later on in the video. But right now, we're going to break down the recent breakdown below $22.60 per share. This was previously a very long-term support level for Palantir. It's indicated by this green line, and we can see that nearly every single time Palantir dipped to $22.60, it had almost an immediate reversal back towards $27.70, if not even higher, within the next couple of trading days. However, this time when we came down and tested $22.60 back on March 24th, we actually saw a close below that level, which we hadn't seen in quite some time. And then over the next 2 trading days to 3 trading days, we actually saw Palantir close consistently below $22.60. It was at that time that I really thought we might see a continuation of this downtrend towards $18 per share. But Palantir actually held this $21.15 per share low that we were seeing over those days. And that really traces back to the end of December and end of November of 2020 when we saw this initial run up into the 20s for Palantir in price, and then a support line back on December 2nd after the initial bump towards all-time highs of 33.50, and we saw that support level come back into play. Now, over the past couple of days, we've seen a great market rebound, just entire market-wide. The NASDAQ, the S&P, and the Dow have been up both of those days pretty heavily. So we've seen Palantir jump back above $22.60. We'll have to see how the price action really turns out next week to see if this was a fake out breakout simply because the market was up, or if this is Palantir starting to see a lot of support come in from retail traders and from institutions buying very heavily near the $21 per share range and acting as another key level of support. If that's the case and we consistently hold $22.60 moving forward, that may have just been a fake breakdown. However, this 2-day recovery could also be a fake out breakout, and we could start to see some more downward pressure. If we break below this $21.15, there truly isn't anything there to catch the price until about $18 per share. So in the short term, I realistically think that if Palantir can't consistently hold $22.60, we're going to see a break at least towards the $18 per share level. However, if we can hold $22.60 for a couple of trading day window, then we know in the past Palantir has very quickly rebounded up towards the $27.70. So that's a pretty wide range here for Palantir, but there's a lot going on in the market right now and a ton of choppiness that Palantir is very susceptible to, as again, people aren't exactly sure how to value the company, which really brings me to the multiples that I want to take a look at. Now, Palantir is really a mega growth company currently, which is odd to say for a company that's been in existence for 17 plus years, but they're really just hitting their stride and starting to grow very rapidly and growing their client base to a point that they can really become a self-sustaining business, because in the past they've consistently lost money, but they're now working their way towards becoming a profitable company by hitting some of the economies of scale that this rapid revenue growth is allowing. In fact, from Q3 of 2019 to Q3 of 2020, we can see 52% year-over-year growth And from Q4 of 2019 to Q4 of 2020, we can see 40 to 41% growth on the revenue side of things. Now, we're not going to worry too much about profitability now because, as I mentioned, they're really just hitting their stride. But if we take a look at the income statement here, with their revenue growth, they've become very close to actually having a net profit. Now, this operating income of negative $848 million and $156 million is actually almost entirely due to unusual items, which are actually items related to stock-based compensation for executives and directors and higher-ups in the company of Palantir with the initial public offering. And excluding these unusual items, Palantir would have actually been extremely close to profitability in both quarters, and in fact likely would have been profitable in Q3 of 2020. So the economies of scale that they're currently reaching are making them very close to not bleeding cash, not needing to have to worry about doing offerings in the future unless they're taking on extreme amounts of debt and need to pay that back. But it's very likely that Palantir is going to be a very fundamentally solid company in the not so distant future, and we're starting to see it lean that way over the past couple of quarters. However, they are trading a little high on the multiple side. Now, this is a very, very simplistic way of valuing a company. The thing with Palantir is there really aren't any direct competitors or direct peers to place them in an exact sector of the industry that they're within. So it's really hard to get a good idea for exactly what some of the multiples should be for this company. But if we take a look at the enterprise value to sales, we can see that it's actually come down as the price of Palantir has come down since the end of December of 2020, and they've gone from about a 30 enterprise value to sales to a 27.8. Now again, this is super high level, and there are a ton of things that could go into valuing a company, but I've pulled up revenue multiples by sector across the United States, and this was updated actually in January of 2021 by the Stern School at NYU, which updates this particular list every single year, and I refer to it often. Now again, there isn't really a sector that a lot of people consistently place Palantir in, but if we just take a look at this column here, the enterprise value to sales, you'll be able to see that no matter where you want to place Palantir, there's absolutely no industry that has an average enterprise value to sales above 30 except for financial services, non-banking, which we know Palantir isn't in. Now, the industry that most people would actually place Palantir in would be this software systems and applications, software internet, and really that's around the 11 to 15 multiple. And if we take a look throughout the rest of the list, that's actually the second highest sector multiple outside of the financial services non-banking. So even if you place Palantir in the second highest enterprise value to sales multiple category, we're still about 60% higher than that valuation. Now, we already know that Palantir is growing between 40 and 50% year over year. So if we were to keep the exact same valuation year over year, that would make the multiples more in line with where the rest of the sectors are if you want to place them in the software sector, or more in line with any of the sectors as a whole, because then the revenue multiple would be a little closer to 13 to 15, which is much more stomachable to pay for Palantir in the long term. So what does that mean? Well, that means that either Palantir is trading between 40 and 50% too high, meaning that it should be trading around that $16 to $18 per share range, or that Palantir's going to need to trade sideways over the next year to 2 years before it can really grow into its current market value and start trading higher. Now, 2 to 3 years down the line, my price target for Palantir is between about $80 and $100 per share. So to me, that means that we're probably going to see Palantir trade between $20 and $30 per share consistently over the next year to year and a half, before we see Palantir break to a point that it's not ever fading back into the 30s, even on downtrends like we see from 2770 to 22. We're going to need to see Palantir trading in the mid 30s so that we can see pullbacks to the $30 per share range before it's really officially broken outside of that range. Now, Cathie Wood and Alex Karp have both gone on multiple news outlets and mentioned that Palantir is a long-term investment. I don't think they're thinking that anything crazy is going to come down the pipeline, and as such, if you're buying Palantir, be prepared to hold it for the long term. But if you want to trade some of the volatility, there's absolutely some really nice returns to be made if you follow some of these key price levels. And again, they're super basic, but it's not meant to capture every last penny. It's meant to get a good entry and a good exit point and pick up an extra couple percent in each direction. So I really hope that this video brought you value. Again, if you're new here, consider subscribing and share the video with somebody else that might watch it, because that really helps out the algorithm. Join the Discord if you're new. It's free, linked in the description and the pinned comment below. Thanks for stopping by, and catch you in the next one.